Greg Vanel. Welcome to Market Call tonight. Our guest is Jaime Carrasco. He's a portfolio manager at Canaccord Genuity. Stick your calls, your emails, and your tweets on precious metals and North American dividend stocks. So give us a call, toll free, 1-855-326-6266. You can send an email to marketcall@bnnbloomberg.ca, or you can tweet us at Market Call. Jaime, great to see you. Always wonderful to have you on the program.
Thanks for having me back.
When I heard I was sitting down with you tonight, I thought gold, 7-year highs. This is going to be a happy man.
I am happy, but I'm also concerned. You know, I've been buying precious metals for the last couple of years, warning people to prepare for uncertainty, have it as a hedge for more and more uncertainty. And what a black swan we have now, right? At first, when I was here last month with Anita, we were talking. I think he had just started to, the coronavirus had just started to sprout, and I wasn't too concerned. But I'm looking at what's happening now, and you know, there's going to be some stresses in the supply chain. We've set up this global system of having everything produced in China, and it's getting cut out. Last report I read was March 16th, early March, I believe it was March 9th, we would have unloaded the last ship that left Hong Kong because China, there's nothing being sent our way. So there will be some supply chain issues that are going to arise. What this means is good for gold, because are we ready to deal with a mess? This is going to be a massive slowdown, and central banks, there's only one solution: to print money. We don't have any reserves built up. What we have is way more debt. So what's going to happen now? It's an uncertain event that I think gold, precious metals, and the safety trade, I think, makes a lot of sense at this point. You know, it's funny, I keep watching the markets going higher, and I keep thinking of that scene in the movie The Big Short, where the guy said shorted, everything was right, but the markets continued to run higher until they didn't. I think we just have to wait for that point. Whenever that occurs, we'll wait and see. But for now, it's nice to see gold and the dollar moving higher. It's showing that part of my strategy is working, and it is the ultimate safe havens are coming in.
Now, you talk about the fact that, of course, despite the coronavirus and the spread and the rise of the death toll, we've seen markets hitting all-time highs recently. Goldman Sachs came out this week in their global equity strategist and basically said complacency. You know, are people not recognizing that this is going to hit the bottom line of corporate earnings? But is it that idea that the Fed is going to save us from everything? Have we fallen to that as investors? The Fed, no matter what happens, the Fed will save us from everything.
Well, you know me, I lost trust in the Fed back in 2008. I've been playing defensive since then and being more cautious. At some point, this has got to end, right? We can't continue just printing money. The issue with debt, we can't issue more debt because we're not getting any economic growth. We've reached ultimate utility of debt. Because of that, something needs to occur, and I think it comes down to the currency reserve. I've always said that when we reach these points within the global economy throughout history, undoing the currency reserve, the US dollar is the only way forward, and I think that will play. And for 4,000 years, that has happened around gold. So I'm still very bullish about gold and what's going forward. Now, I have my positions in place. I'm good to go with that. So I'm looking at other areas, things that I think are more fascinating, like blockchain, for example, that I think we have a double bottom. I see it like buying Google back in 2003, 2004, after that first burst. That was the time to be shopping for good companies in that area, and I think that technology fascinates me because we can finally participate out of the growth of the system. But it's right now where, remember when the internet, it was just professor communicating through the phone with the internet, very little integration. Well, we've just crossed 1 billion in Ethereum-based apps. So that will continue growing, and companies that are using those apps are saving a lot of money. So the savings on the accounting and ledgering side are going to drive the technology, and I think that is an area that I would definitely be looking at going forward.
Are investors confusing the underlying technology with the Bitcoin, the coin craze?
Well, that's a good question, but I think that's like confusing the internet with Google versus PayPal.
Okay.
Different animals, right? What's interesting is that the value of the blockchain will grow through the value of the coins, and that's the key to fully understand how the integration of the system will work as a ledger, because that's what it is an electronic ledger. And what a ledger does is what really will take a little bit of time for people to figure out. And to a big extent, the problem with gold, blockchain is the solution. So I'm very happy with both. There is a parallel. You know, I like.
Can they coexist in the future?
Definitely, definitely. Because again, gold is money. The problem is not money; it's currency. It's this paper game that we have afoot. If we have an electronic currency that can be outmoded or plagiarized, printed, I think there's some benefit there. So yes, there is coexistence between the two, and I think it's just lack of understanding and a little bit of ignorance of what money and currency is, right? So I do think there is a parallel for them. But for now, let's worry about how we go through this next storm that's hitting us and, try to make some money out of it.
Interesting stuff. We'll be back with Jaime Carrasco. He's a portfolio manager at Canaccord Genuity. Wants to answer your questions about precious metals and North American dividend stocks. So give us a call, toll free, 1-855-326-6266. Let's get the questions started with an email from Aaron in Windsor, Ontario. Canadian Natural Resources is now a good time to get into CNQ. Would you consider it a good hold for the long term?
I think it is a good hold for the long term. It's probably a good time to be looking at it. I don't know if I'll be getting into anything right now. I'm a little bit more cautious. If you'll notice on the last of the top picks today, it'll be to hold a little bit of cash for now.
Okay.
Right? But because of that, this is one that I would definitely be tuning in my shopping list. I think in North America, we have, it's interesting because this coronavirus, I think, is setting us up for an interesting shift in that we are going to go through a full realization that the supply chain coming out of China is just not going to work globally. So we're going to bring back production back to North America, which is something that Trump is starting to do.
This will be the catalyst, yeah?
As we see the numbers start to come in. So, what's going to happen? I've been looking at Suncor, for example, on the energy complex, and the stock has done well. Natural resources, they've all seemed to have a bottom. And I've been looking for an entry point. So I was pretty ready to start acquiring until a month ago. For now, I'm going to wait and see. But I do think that so far, it's been the coronavirus has affected a lot of Asia, so it's Asia bound. North America seems to be quite, we're monitoring things and we don't have much infections over here. So I do think that on a long-term basis, we'll be a little bit better off, but by the same token, it'll allow us to rethink the way we've been doing things. And if you look at what Trump wants, he wants to bring manufacturing to North America, which will benefit Canada. So on and all, I think it's not a bad time to be looking at how is the North American economy gonna play out with I think, a second term for Trump as well.
Very interesting. All right, Nazar in Scarborough is on the line. What's your question, Nazar?
Hi, gentlemen. I have a question for Mr. Carrasco, and this is in regard to Kirkland Lake. Lately, the price of gold has risen sharply to be around 1650, whereas Kirkland Lake seems to have dropped in the last 5-7 days and then slowly backs up again. I don't quite understand the gyrations about the movement of the price on Kirkland here after it acquired Detour Gold. It seemed to have suffered. May I have your thoughts on Kirkland Lake going forward, and is it safe to step in, sir? Your thoughts will be greatly appreciated. Thanks for taking my call.
Thanks, Nazar.
Thank you for the call, actually. Kirkland Lake and Agnico Eagle, two companies that have had a big pullback in price of late, and two companies that Canaccord lowered the target to hold. However, having said that, I have both of these companies in the portfolio forever. I'm not selling and I'm holding on to my position. And one of the reasons that I like these companies is because of the leverage they have to earnings, right? I think the merger of Kirkland and Detour is an amazing entity between the two because we've gone from having a long mine life and a short mine life. Putting them together, you get a much streamline of life for the mine. And I think the leverage financially will be really good going forward. So at this price, even though we had them on hold, and that was when they announced it, we do have a $55 target. What I can say is the price appreciation in the price of gold and the decline in price has created an opportunity again. How do I play these companies, Agnico Eagle and Kirkland Lake, because they're core positions? I like to have them at the same weighting within my portfolio. I want to have the leverage of the good, solid producers that are paying a dividend. Not all of them are paying a dividend. These two are. And I'll hold them at, let's say, 5% of the portfolio. If they drop to where they become lower than that 5%, I will add again, right? Bring it back up to 5%. So take advantage, take the emotion of the stock price going up and down and take it out. What I can tell you about Agnico and Kirkland Lake, every time they've had one of these pullbacks, management has always pulled it around again and they come back very quickly. So, it's part of the business. The volatility is part of the sector. I think people have to understand what you own, how good of a company it is, and manage along that way. I personally am not selling. If anything, I would be acquiring, because if I had to rebalance today on the portfolio, both of those are below the percentage I don't want to hold them, and I would be adding to them automatically, right?
Very interesting. Henry in Hamilton on the line. Henry, what's your question?
Good evening, gentlemen. Please, your assessment of MAG Silver, ticker MAG, and if forced to select one, would you choose MAG Silver or America Silver, USA? Thank you.
Oh, that's a trick question. I would definitely use.
He's trying to trap you?
No, but I would go after USA for sure. I've been following them forever. I like the way that MAG is a one project story, right? They got to get this mine up and running. They're tied up with the Fresnillo in Mexico, which is it's a good deposit. The mine's being built. Once it's up and running, I think there's going to be a lot of cash flow. But that's the problem. At least with USA, you have 5 different projects. They're a gold producer. They're producing gold now. That's up and running. They have a number of silver mines, so they'll have, I think, better leverage going forward. And the costs, the execution from a time perspective, USA has reached much faster. Having said that, we do have MAG with an outperform and a, give me 1 second, a $21 target. That's a speculative buy. And I think it's a great company. Choosing between both of these, silver ski, I think silver will move much faster than gold. I really like silver. I think we're finally breaking up above 18. And above $20 silver, USA is definitely the pick I would go with. Why? MAG Silver and most of the silver companies have been producing their best rock to stay alive. USA is the only company that's been producing their worst rock, haven't even touched the best rock. They're saving it for $20 silver. So as soon as we go above 20, the management team is going to switch to this higher grade, and earnings are just going to skyrocket that quarter. So it's a matter of time. That's good execution to me. So USA for sure. USA. Gotta love the
Get
symbol.
the chant going. Get the chant. We got Ram on the line from Calgary. What do you got for us, Ram?
Could I please have your opinion about Hudbay Minerals, HBM? Today it closed at $3.76 at the rock bottom and dirt cheap price. Could this stock give a good return in the next year or so? Thanks for your opinion.
I think eventually it will. The question is, are we willing to wait for it? I don't like the base metals just yet. Again, I keep looking at the price of copper. If you could bring up the price of copper as a global barometer, what's going on right now, I don't think any of these stocks are going to move just yet. We need to see what's going to happen with the global economy, so I would be waiting. Having said that, I think the base metals, until copper breaks above $2.75, $3, I would be, look at the decline we've had.
That's a coronavirus effect too, right? China, a huge consumer of copper.
That's exactly it, right? And before the coronavirus, I was looking at it coming up nicely, and I was thinking, okay, maybe the reflation trade's coming back in, inflation's going to kick in. But for now, I'd rather wait. When that occurs, Hudbay, Tech, all of these companies will move nicely. But is it time yet? I don't know. I think sitting in cash for now, precious metals definitely, but waiting on the metal side would be good.
Doug in London, Ontario. What do you got for us, Doug?
Good evening. I'd like to know your guest view on Russell Metals. It slid a bit after their Q4 earnings report on February 12th, and I was wondering what he thinks of the entry point where it is now, or does he like it at all? Thank you.
Thanks, Doug.
Just on a side note, by the way, the Hudbay, we have it with a 7. We just lowered our target to 6, and we have it as a buy. But again, I would be waiting. Russell Metals, I think it's the same thing. I'm going to be looking at Russell Metals for a while, only because it's steel in North America. I think back to the discussion in the beginning, if we do get a reorganization of manufacturing coming back,
we bring it back here.
We bring it back here.
Yeah.
Russell Metals will definitely benefit from that. So it's another one that I would be waiting on to jump on board once we see as we get through this. And I think they'll have a more immediate effect than Hut Bay or anything like that. So Russell Metals would definitely be one that I would be looking at a little bit later, but I wouldn't be shopping for it right now.
I'm intrigued by this idea of manufacturing returning to North America. I mean, it's no small feat. How do they pull that off?
Well, they got to kill the dollar, first of all, because, and I think that's the key to Trump's MAGA. If he wants to make America great again, he would have to kill the dollar to really rebalance the currency effect of labor, right? You can't compete with labor in China at the currency level. So that, to me, is the number one. Back to the currency reserve. Killing the currency reserve works for China and for the U.S. The other question that I have is, this virus is Asia-bound, but it's a perfect catalyst to kill a lot of this debt bubble. It'll force us to do something. So we can't go down the road. So again, it's not a good catalyst. It is definitely a black swan. But how do we do it? I think it'll require, some kind of a global. Hold on. Shouldn't use the word global because. Go back to last October when Carney was in Jackson Hole, and what did he say? He was talking about the currency reserve needing to be unwound, but what he was really saying, the IMF should control it and the banking system should control that process. Then go back to about a month ago before the coronavirus thing exploded, and Trump was in Davos talking to Mark Carney at their hometown, because that's where the IMF is, and what did he say? Forget it. The globalists are not controlling this. We're going to control it ourselves. So what he's saying is, yeah, something's coming, but it's not going to be in the control of the banking system. It's going to be control of the nation. So he's unwinding the global system that we've set up. Back to what's happening right now, where we're going to really question whether producing everything in China and then shipping parts all over the world makes sense. One of the areas, by the way, that I was reading a report, the first area of supply-side disruption will be within medicine, because there's a component in medicine that is only produced in China. It's not the end component that is patent, but it's something that goes into the overall medicine that we just don't make anymore. What was the other one? Not precious metals.
Copper?
No. You may,
look, I'm on a game show now.
Sorry. It'll come to me later. Yeah. But there's another whole section of very rare metals that are only produced in China. We don't produce them in North America anymore. That's also going to get affected. So, the supply chains, I think this is going to force us to reevaluate all of that.
I love the way this man mine. I love how you put things together, connect all the dots. We should get to a call, though. Michael in Burnaby, BC. What do you got for us, Michael?
Vermilion Energy. You recommended Vermilion Energy last month at about $21. It's currently near its 52-week low. Do you still have a target price of $35 on that? Thank you very much.
Yes, we do. Yes, we do. And again, it's being affected by all of these things, right? So a stop loss might raising some level of cash might make sense. But again, Vermilion of all the Canadian oil companies is the one I like the most because they don't produce here in Canada.
Exactly. They got the Brent exposure.
It's in Europe,
right?
So they get the Brent exposure. So there is that benefit. So who knows? Maybe this, I would have to review it, but it hasn't really fallen apart. It's going sideways if you look at the chart. So it's still a pretty good entry point from where it was before. It'll just require a little bit of patience.
All right, we're going to get Wendy in Edmonton in there before we have a break. Wendy, what do you got for us?
You've been a busy man. Every time I look at the TV, you're on.
Oh, me today? Yeah, I know. Suddenly, it's like we're going to the one anchor model. I just keep on going.
Yeah, I know. I get double vision. Hey, can I ask Jaime about Eagle? The stock dropped quite a bit after the earnings report. Is this problem fixable with this equipment problem? Should I buy more? Thank you, Jaime.
Thanks, Wendy.
Bye-bye.
I would, I would be adding to it at this level because it's definitely dropped below my asset allocation. Let's talk about the equipment problems. These guys, that's coming as a result of one of the other mines they're building. They're building a number of mines, and building a mine is a massively big industrial facility. So nothing's easy. It's to be expected that they're going to have some kind of a hiccup along the way. Following Agnico for as long as I have, remember the big issue they had with LaRonde when actually a rock fell right down and they had to readjust? Yeah. that was a one-quarter issue, and the stock came right back up. The beauty of Agnico is its execution by management. Management has been able to manage this company in an unbelievable way. They're completely self-sustaining. They keep raising the dividend. I wouldn't be concerned. What's more important is the leverage. These companies have massive leverage to the price of gold. They're producing below 600 now. So think about it. Canadian gold in Canadian dollars is above 2,000, 2,100, I believe. They're producing at below 600 Canadian. So when we were at $1,500 gold, that's a 500% increase in their earnings potential. Now that we've gone from $1,500 to $1,600, that $100 increase paid for all the issues that everybody was worried about, right? And so what's important is we have a leverage machine that'll deliver income and let management build the mines, and they've been building many of mine, and once they're up and running, they're producing in a beautiful way, and that's what we want is the cash flow. But you got to expect volatility. So what you need is a strategy to be able to acquire more. Last year, we had a nice run into the end of the year. Kirkland Lake was on fire. I kept cutting it back because it was above my percentage that I needed, and I was buying other companies. In this case, I would be buying Kirkland Lake and Agnico now if I was to do a rebalancing. I actually did a rebalancing just about a week before the earnings came out, and I ended up selling a little bit of Agnico because it had grown more. But I bought a little bit of Kirkland Lake because by then it had dropped more, right? And we were rebalancing one of our blockchain positions that we put on that just had a massive spike since December. But it was a fluke. Now, I'm not going to do a rebalance now because I only did it about two and a half weeks, maybe 2 weeks ago. So I'm not going to rebalance now. But if I was rebalancing now, I would be buying. So that's all I can say. It's a great company. They deliver well, low cost of production, and massive reserves on the ground, which is big value, right? The gold on the ground is going to be the key of all these companies in geopolitically safe areas.
Yeah, that's the key too.
That's the key.
Geopolitics. We're going to be back after a little short break. We're going to go through some of the past picks when we get back. It's time for the past picks. We go back to April 16th of 2019. You liked America's Silver, and yeah, that worked out. 87%.
Funny, I hadn't even noticed. Yeah, I think it's one that I'm still holding. Again, as I said earlier, it's the leverage, the execution. I just like the management. They've done extremely well, and I think that base that we see right there, it should be much higher than it's currently trading. We don't follow this one at Canaccord, but I've been in it since it was RX Exploration. I happened to be in it when they did a reverse takeover of the company, and I've been following. Management is the M&A team that came out of Barrick. Okay. So it's a very, very experienced management team, and they've definitely delivered along the way. And I'm not complaining with this hold, and just let them do their thing.
All right. I mean, the next one's a winner, too, but it's pretty hard to compare to 87%. Enbridge, total return of 18% since that time.
This is on the core side of the equity income portfolio that I hold. I like Enbridge. It's all of the pipelines and utilities. You know, I personally think that as we go through this change that we're talking about, it's going to be an inflationary wave, and these kind of companies are going to benefit from that no matter what. One of the things, look at AltaGas, for example. Look at AltaGas with regards in the content of the Alberta economy and what they've gone through. Well, the company is delivering a bare minimum of economic activity, paying for the dividend, and that's why I like these type of companies. Anything that I feel is solid infrastructure for the Canadian economy, North American economy, no matter what happens, they're going to have earnings, and at the end of the day, they just pass through any increases in inflation and cost to us. So I might as well be getting paid to pay my bills, and that's why I like Enbridge. The dividend's solid. I've never questioned it. If anything, it's my gauge. I'll never forget. December of 2008, the dividend was up to 9.5%, offered a great entry point. I think we're trading about 6% right now. Maybe it's a little bit higher, but it hasn't pulled back much. So yeah, I would, solid company.
Your final pick was cold, hard cash.
Yes, at that point I was sitting in cash. I've been raising cash over the last year, but I keep spending it as I find new areas. Right now, the cash back then was spent. I was spent on convertible bonds, and I'm still sitting on those, and I think it's a good place to sit on while we wait.
We'll be back with Jaime Carrasco, Portfolio Manager at Canaccord Genuity, to answer your questions about precious metals and North American dividend stocks. So give us a call. Toll free, 1-855-326-6266. Duncan is on the line from Vancouver. What's your question, Duncan?
Could Jaime talk about the prospects for K92 mining, please? Thank you.
K92, all right.
Oh, man. K92, this one's one that I'm completely torn because it's not in my geopolitical spectrum, but the performance of the stock just has me amazed. It's kind of showing what a lot of them are going to do, and it's on discovery. They have a big discovery going. We have a $5 target. It's getting up there. This was updated February 20th. We're maintaining a buy, and the numbers coming in from their drilling program are really good. So I don't know. I think it's one that, regardless of the geopolitics, if I had some money to really speculate, it's in Papua New Guinea, and every time I've looked at Papua New Guinea, it's you know, I would have to go through the mine loss and see what's going on, but the stock is definitely doing well, and you know, do I want to chase it? If the results continue like this, it'll have a lot more room to go because they seem to have a big discovery in place.
Ken in Canmore, Alberta. What's your question, Ken?
Chiron Life Sciences. I know Jaime's talked about this in the past. My utilities and REITs are doing very well. I'm not dripping them, and I'm getting the cash coming into my accounts as Jaime is perhaps recommending going forward. I'm looking at bottom feeding, and I note that since Chiron dropped below $1, the volumes are way up, and the RSI is looking pretty grim, but is this an opportunity to spend a few of my spare coins?
We think so. We have a pretty big research department on the cannabis side, and we like Chiron. We have it with a 325 target. I was in Colombia last October looking at different companies, and this is one that I sat down with and I looked at. They are definitely, I think, out of Latin America. They're gonna take a lead. They're one of the companies that definitely shows much promise. Only thing right now is again the bottom feeding part. The sector is going through some nice consolidation. It is a time to be shopping right now. If I was shopping in the sector, would I be going after Chiron first? I would probably be looking at Charlotte's Web, the bigger extractors first. I think they pulled back quite a bit as well, and they have actual solid earnings, more than Chiron. But Chiron is one that below $1 definitely seems to be quite a bit of value, and I do think that Colombia will lead in production, no cost of energy. So it's one area that going forward for the cannabis industry makes a lot of sense. The other thing with Chiron is they are positioning, I kind of like their marketing strategy, but how will they deliver? Because it is early, Latin America doesn't have the same perception with cannabis as North America does. Not everybody smokes it the way we do up here. So that's a bit of a question mark. But when I was in Colombia, I was quite amazed at how the shift between THC and CBD and how the concentration of CBD for medical purposes. And Brazil now is also getting on board, which was the last big announcement for Chiron, that they got approvals from Colombia and Brazil Health Authority to move forth. So there is growth. So it's one that, would it be the first one that I pick? Maybe not necessarily. I would pick the other ones with better earnings out of the States. Again, Charlotte's Web. But this one definitely would be in my quiver to be looking at when it's time to jump in. When to jump in, I would want to see a solid rebound. The one positive thing of the cannabis industry that I did notice was the employment number when they came in about a month ago. It is one of the industries that is actually delivering increase in employment still, which means that there's still growth there. So back to the, and actually it's funny, on the way here, I was thinking about this on the coronavirus and how it affects on the medicine side. Maybe this will be a really good catalyst as well for CBD in North America. The medicinal side of CBD that is being produced here, as maybe we'll see how much decline in other medicines because of the supply chain disruption, might be a really positive catalyst for cannabis. So again, one that I would be looking at.
Putting those lines together in creative ways. Let's take a tweet from Ron. Let's talk about Marathon Gold. What are your thoughts on Marathon Gold?
Marathon, I keep looking at this one. We have it as a speculative buy with a 250 target. My problem is I'm fully invested right now, but it's one that I've looked and definitely looks interesting. Hold on, give me 1 second. Marathon Gold Corporation. I just want to take a look at one thing. Sorry, I should have brought this up before. I wanted to know where they were in terms of the mine, their project. Because so the resource has definitely been updated, and their project is coming along well. Would it be the first? The question now is this the first? Would it be the first company had a jump on board with the sector, right? So again, if somebody has never participated in the sector and they're deciding to jump in, first thing is to look at gold itself as cash, then the producers, and then the developers, where these guys would come in, right? The developers are coming a little bit behind only because they don't have any earnings yet, but this is the one that the stock has definitely been moving higher, and there seems to be support there. Target 250 with a speculative buy. And it is in Canada, by the way.
There you go.
In good old Newfoundland and Labrador.
Really? All right.
Central Newfoundland.
My people are from Newfoundland. We'll be back with Jaime Carrasco, portfolio manager at Canaccord Genuity. Charles in Vancouver is on the line. What's your question for us, Charles?
My question's on Brookfield Asset Management. Is it a good time to sell, or do you think that they will raise the dividend on that stock?
Ooh, good time to sell. You know what? Good time to sell again. If you've held it for the last couple of years and had the run it's had over, the last 5-7 years, maybe it's not a bad time to take some money off the table. I look at my Brookfield Asset Managers, my REITs, within the cash flow component of my portfolio. And because of that, what's important to me is more the cash flow that they're generating. And manage around that. Within that portfolio, it's 20% in precious metals, so it's nicely hedged as well. So what I'm looking to do, and actually I've raised a lot of cash last year, and that cash is still sitting there. So what I'm planning to do is to watch my precious metals rise and eventually take those profits and move them over to generate more cash flow. So I have a bit of a strategy with it. Brookfield Asset Management is one of the core of that portfolio, but it always sits at about 5% of the portfolio, and I don't let it get away too much out of that. So what I'm doing is always rebalancing between one or the other. Between these infrastructure and REITs, I think we're really well hedged for any interest rate disruptions, even though at some point, what's going to happen with the real estate market, I don't know, but I like the rentals. We don't have enough, and generating good cash flow. Brookfield Asset Management, same thing, right? There's massive cash flow globally, so I'm also hedged for the Canadian dollar. Would I be selling? Again, it depends on what percentage of the portfolio it's in and how much do you have, right? It wouldn't hurt to raise some cash and to have at least, nobody has any precious metals. I keep recommending 20%. Let's start with 1%.
Get your toe in there. Bill in Red Deer, Alberta. What's your question, Bill?
Yes, I'd like to ask Jamie about Interpipe and his outlook on it, and if he'd be a buyer here.
All right, let's bring up that chart for IPL Interpipeline.
Just what is the yields, really, what I'm looking for?
7.9%.
Perfect. Okay. So my strategy with the pipeline, so I have Pembina, I have Interpipeline, I have Algonquin, TransAlta, right? And what I'm always doing is playing them against the yield that they're giving, right? I see them as monopolies. We're not building any. Look at all the problems to even get anything done in Canada now. So anything that's built has beautiful leverage, and it's a monopoly. So because of that, what I'm playing out of them is which one has the highest yield. So I'm trading cash flow. So this one right now is yielding a little bit higher than, I can't remember which one. It might be Algonquin. Within the pipelines. So what I would be doing is moving from that to the other, right, to maintain my cash flow. With all the pipelines, I'm not concerned about the cash flow. They continue to transfer stuff around the country, and be it oil, be it fluids, be it gas, and they get paid for transferring. So they're safe investments. It's what's going to be your strategy.
Scott in Port Elgin, Ontario. What's your question, Scott?
Hi. I'm interested in getting the thoughts on wheat and precious metals, and would you buy more at this point? Thank you.
That's a good question. I used to own wheat and precious metals, silver wheaten. I bought it originally back when it was set up a long time ago, and I wrote it up. My problem today is that I would have to choose between wheat and precious metals and Franco-Nevada for my top tier one, because both of those are not going to have any. Okay, these are royalties, so what they're doing, they're financing mining projects. As those mining projects come online, they start to generate cash flow. Silver wheat and precious metals is not going to finance anymore. Whatever cash flow is coming in, that's going to be it. So I'm not going to get that upside. I'm looking for that upside out of my royalties. I'd rather get the steady cash flow out of Franco-Nevada. So put that one aside. And for what silver wheaton used to deliver, I'm going with Metalla and Sandstorm. Are the two that I've been buying, because there I'm going to get appreciation in the projects and increase cash flow over time. So I want to be at the beginning line of that life cycle as we're riding this bull market that began in 2015.
We're going to take a little break. Be back with Jaime Carrasco, portfolio. It is time now for top picks. First on the list, Fortuna Silver. What do you like about it?
I like silver. I think silver has way more upside than gold. Fortuna has been in the portfolio for for a while now, and it's been the laggard. So it's the one that I, by default, I've ended up buying more and more shares as the other one have grown. So I'm quite happy with that. They're building a mine, and that mine's coming online now. It's getting to the end of it, and I think once that comes in, it's going to be one of the most profitable mines around for silver. It's in Argentina, and as that occurs throughout this year, as we ramp up, I think the stock will definitely begin to move. We have it with a 650 target, and I like the project. I like the company, and I think now, they've been building this, so it was a matter of time, and I think we're about to start getting paid for it. So it's not a bad time to be buying it.
Not a bad time. The next one on the list is Osisko Gold Royalty.
Another royalty company I have within the portfolio, but this is more of a senior one. I like it. Good, solid cash flow. We have a $17 target. I like their projects. A little bit safer than Osisko itself. You know, with the royalties, you're taking out the development exposure, and you're getting the cash flow. So it's one, again, that I think it should start to shine now that once we get the break above 18 in silver and now with gold at this price.
Those are two names, and you liked cash the last time? You still like cash?
Well, I was fully invested, but as I was planning for the show here, it would be cautious to have some cash levels. I'm already, most people don't have any precious metals, nor do they have any kind of protection. So cash would be prudent right now, just to race a bit and see what happens. Let's see how long this takes. It's just getting, another month of this, and maybe things could get worse before they get better. So not a bad time to be a little prudent.
I guess the tricky stuff with cash is you got the cash, you're being prudent, and then you're trying to decide when is the opportunity, right? Well, so I had a caller earlier talk about bottom feeding. It's awfully hard to time the market.
Well, it's kind of hard, especially with these markets that have been going up forever. I myself, I'm not too keen on jumping in on the market at this level, but I do like the hedges. Everybody that's been following me for a while, I've been saying precious metals and the other side of the trade is the best thing, because I'm a bear of fixed income. Look at what's happening in the repo market. I think at some point that will have consequences, and that's what I'm preparing for more than anything.
More than anything, and this idea too that the Fed has everybody's back. The central banks can cure everything. Yeah, you lost faith in central banks a long time ago.
Oh yeah. I think they're the problem, but hey, we can't voice that too loud.
Except on a national TV program.
Exactly.
Any final thoughts for the audience?
At the end of the show.
Before we get you back on again?
Precious metals, I think they're going to have a good year, and more money is going to come in. We're still very little participation. It's under 1%. At the height, it was 8%. It's, what is it, half of 1% right now? Nobody owns these stocks, so don't get concerned about the volatility. Just understand that this sector has a lot of volatility.
All right. I mean, it's always a pleasure to have you on. I love the way your mind works. I love the way you connect the dots into stories.
Thank you.
Particularly intrigued about that manufacturing thing. That one's going to stick with me. Thank you for joining us. As always, at home, please consult a qualified financial advisor before you make any investment decisions. Of course, you can watch BNN Bloomberg all weekend. We're going to go home and enjoy ourselves, and hopefully you do the same. We'll see you next week.